Hi, this is Tom Alexander with Alexander Trading, and this is part one in a series that I'm going to produce on market profile. Market profile is not what most people think it is. There's a lot of confusion about it, and this is going to be something that I hope will clear up exactly what market profile is, as well as what it's not, and then most importantly, how you as a trader can use market profile as it is in its highest use, and that is basically as a tool. So let's get going here. Market profile is a way of graphing data. It is a graphing format. It's a data graphing format. It is similar to, in that regard, a bar chart, candlestick charts, point and figure. Now, its uniqueness is that it emphasizes trade activity on the horizontal scale. So it's a little bit like point and figure in that regard. Point and figure emphasizes trade activity on the horizontal scale much more so than say a bar chart or a candlestick chart or some of the other charts. There's no magic in a charting format. There's no magic in market profile. There's no magic in candlesticks. There's no magic in point and figure. There's no magic in all the other charting formats that are invented to fulfill the demand for magic. Unfortunately, you have to understand the market. Now, market profile can be an incredible tool in helping you to understand the market and what it's doing, why it's doing what it's doing, and help you in your trading. Those are topics for another series that I'm going to do. But for now, just know that market profile is not an end in itself. There's no magic in market profile. It's a means to an end. It's a tool, and properly used, it can really enhance your trading. But it's not magic. So let's take a look now at some of the market profile terminology. There are TPOs, point of control, value area, initial balance period, and day types. These are 5 terms that can be somewhat head scratching by someone that comes in and begins to scan the internet on what market profile is. And I'm going to go through each of these terms. There'll be other terms that we'll use, but these are the primary terms. These are legacy terms. In other words, these are terms that began back in the 80s when Peter Stettlemyre first posited market profile as a charting format. TPOs. Well, a TPO stands for, it's an acronym for time, price, opportunity. Point of control is a single point of control around which price is rotating. I'm going to show you a graph in a minute, and I'll go through this on the graph. But for now, I just want you to see this so that you'll have a frame of reference. The value area in a profile is, profiles are chronologically constrained and defined areas. And if we're looking at the day session of, say, I'm going to show you the Russell mini future in just a minute. If we're looking at the day session of the Russell, then the value area is that area that contains 70% of the trade activity in that time frame. So for the day session, the initial balance period is the first hour of trading of a session. And then day types, and this is a legacy concept. Day types were initially posited as you had, I think Stettlemyre initially had 4 day types, and then that was expanded to 6 or 7 day types. The reality is you could have an almost infinite number of day types. And what occurred after the first hour of trading began to define what type of day, quote unquote, was most likely. Now, this is a legacy concept, and it's not valid. The day type concept is not valid. Whether a day is a neutral day, a trend day, a double distribution day, a normal day, none of those things can be determined until that particular session has ended. But that's a legacy concept. It's something you're going to run into if you're perusing the internet looking for information. So I thought I'd throw that out. Now let's take a look at a profile graph, we're going to take a look at a market here. And this particular market happens to be the Russell. This is the Russell E-mini contract, and it's actually, as I'm recording this, it's presently trading. Now, the TPOs you see, if I split this out, this is each one of these letters represents a 30-minute time frame of trading. When the next 30-minute begins, the graph shifts over to the right, and then that letter begins to display. Each time a price is hit in a given time frame, that letter prints for that time frame, but it only prints one time. So you can see right now we're in the H period. Now at this particular moment we're trading right here. Now it doesn't matter how many times price rotates around. Let's say, what is this price? This price is 1102.80. It doesn't matter how many times 1102.80 is hit. There's only going to be one H. Now in the next 30-minute period, prices will shift to the right, and if prices are trading or trade, anytime price trades at 1102.80, then it will print a G. I mean an I, not an I. It will print an I. So this basically could be a 30-minute bar chart. Now what makes the graph unique is when we collapse it. And then what you get this red line in the shaded area. This is 70% of the trade activity that has occurred so far today. Now this area can change. It's dynamic because it's 70% of the area for this session. This session is not complete. So this could expand, this could narrow. The yellow line you see over here is the initial balance period. This is the range that occurred in the first two periods of the first hour. B is a 30-minute period, C is a 30-minute period in a traditional market profile format. So now you know everything that there is in terms of the basics of market profile. So you have a market, and each time price is hit, a new price is hit in a time frame, it will print the letter that's designated for that time frame. You have the value area that's here. You have the initial balance period. Something I forgot: point of control. And this is a biggie. The point of control is that price that contains the most, in this particular instance, the most TPOs. Now a TPO is a proxy for volume. It was originally designed to be a substitute for volume, because when this concept was initially posited, you couldn't get real-time volume. As a screen-based trader, when I was trading, when I first began trading back in the 80s, you could not get real-time volume. So the profile graph was designed to mimic floor activity, and part of that was an ingenious way to provide a proxy for how much trade was going on at a given price. So the trade, the red letters you see, the horizontal red letters B, C, D, E, F, that is the greatest number of trade activity, that it's the most common price in this time frame. If we look at down here, if we look at the Globex session, you can see this is the price. This is the most common price, so it's highlighted. And there's quite often magic attributed to that price. Point of control refers to the market that it's rotating around that price. In other words, that price is controlling the market. If the market goes very far above that price, the market will bring it back down to that price. If it goes too far below it, it will bring it back up to that price. Now that's the concept. I'm not saying that's a valid concept, but that was the concept of the point of control. I just want you to know what it is. So this is part one. There are going to be more parts, and there'll be more series in trading market profile, how to trade market profile, how to best use market profile. So I hope you found this helpful. Also, please check out our website, www.alexandertrading.com. We're going to have a series of blogs, YouTube information, general blogs and information about trading. I've been trading for going on 30 years now, and I have a lot of ideas and concepts I want to share with you. So thank you very much for your time. I look forward to seeing you again.